The Intelligent Investor by Benjamin Graham. Chapter 1: Investment versus Speculation. This chapter, Graham highlights the difference between investment and speculation. He defines investment as an activity that involves analysis and research to make informed decisions on the purchase of securities, while speculation refers to the act of buying securities based on market trends and speculation about their future value. Chapter 2: The Investor and Inflation. In this chapter, Graham discusses the impact of inflation on investments. He emphasizes that inflation erodes the value of money over time, and suggests that investors should consider this factor when selecting their investments. Chapter 3: Century of Stock Market History. In this chapter, Graham provides a historical overview of the stock market. He highlights the various market fluctuations and the impact of world events on the stock market over the years. Chapter 4: General Portfolio Policy, the Defensive Investor. This chapter focuses on the investment strategy for the defensive investor. Graham suggests that defensive investors should invest in a diversified portfolio of low-cost index funds and bonds. Chapter 5: The Defensive Investor and Common Stocks. In this chapter, Graham discusses the role of common stocks in the portfolio of a defensive investor. He suggests that defensive investors should invest a small percentage of their portfolio in common stocks, and should focus on blue-chip stocks that have a strong financial position and a long history of stability. Chapter 6: Portfolio Policy for the Enterprising Investor. Negative Approach. This chapter focuses on the investment strategy for the enterprising investor. Graham suggests that enterprising investors should focus on identifying undervalued stocks and should avoid overvalued stocks. Chapter 7: Portfolio Policy for the Enterprising Investor, the Positive Approach. In this chapter, Graham discusses the positive approach to investment strategy for the enterprising investor. He suggests that enterprising investors should focus on identifying companies with strong financial positions and growth potential. Chapter 8: The Investor and Market Fluctuations. This chapter focuses on the impact of market fluctuations on investment decisions. Graham suggests that investors should avoid making emotional decisions based on market trends, and should instead focus on long-term investment strategies. Chapter 9: Investing in Investment Funds. In this chapter, Graham discusses the various types of investment funds and the benefits and risks associated with investing in them. He suggests that investors should carefully research and select investment funds that align with their investment goals. Chapter 10: The Investor and His Advisors. This chapter focuses on the role of investment advisors in the investment process. Graham suggests that investors should carefully evaluate potential advisors, and should work with advisors who prioritize their clients' interests over their own.